Let's go global now, starting from the Bank of England, which is set to make its last interest rate decision before the autumn budget later this month, with economists saying that although the central bank is more likely to hold rates steady, it's not a given. Economists forecast for the most part that a majority of the BOE's 9-member Monetary Policy Committee will vote to keep its key interest rate. In any case, there's a general consensus that the rate setters could trim rates as soon as December and will cut again over the coming year in response to expected cooling inflation, the rate of which remained unchanged for the third consecutive month in September at 3.8%, and a softening of labor market data. The United States Supreme Court on Wednesday heard a case on the Trump administration's reciprocal tariffs, and both liberal and conservative judges appeared skeptical of the legal basis of those tariffs. Following the hearing, traders on the prediction market, holy market, think that there's only a 26% chance that Trump's tariff will hold, down from roughly 50% a day ago. Markets rose after the hearing, with major U.S. indexes rebounding from Tuesday's losses. Still, the end of tariffs wouldn't be an unequivocal win for stocks if the Supreme Court compels the White House to refund billions in collected duties, a move that Wolf Research says it doesn't seem much of a legal argument for. It would mar the U.S. government further in debt. In turn, Treasury yields are likely to rise, as they already did on Wednesday, which could put pressure on stocks. Meanwhile, Trump could invoke other executive powers to reinstate his tariffs, causing further unpredictability for businesses and markets. And still in the U.S., Transportation Secretary Sean Duffy has announced that he will be reducing flight capacity by 10% at 40 major airports starting from Friday, and that's affecting roughly 3,500 to 4,000 flights daily. It was not immediately clear which airports would be affected. And the disclosures also raised concerns about already thin staffing among air traffic controllers, and insufficient staffing at some FAA facilities has disrupted some flights even before now, since October the 1st. In Vietnam, exports fell in October from a month earlier, with shipments to the United States dropping faster as a trade-reliant country adapts to American tariffs. The Southeast Asian nation is still in talks with Washington over a possible trade deal. In August, President Donald Trump imposed 20% tariffs on American imports of Vietnamese goods in a bid to reduce the U.S. sizable trade deficit with Vietnam. The duties have slowed Vietnamese exports to the U.S., its largest foreign market, but the trade imbalance remains. For the first time, 10 months of the year, Vietnam has reduced a $111 billion trade surplus with the U.S., pointing to another potential annual record. This is according to Vietnamese data, which is usually more conservative than U.S. figures. The U.S. is not releasing trade data due to the ongoing shutdown of government. And Microsoft is giving employees a way to raise concerns about the uses of its technology after controversy emerged over the company's work in the Middle East. An internal portal for Microsoft 200,000 plus workers now includes an option to request a trusted technology review, according to Brad Smith, the company's president. He wrote in a memo that was disclosed in a securities filing on Wednesday. It's designed for bringing up misgivings about the ways Microsoft builds and uses technology. The move comes weeks after Microsoft stopped providing some services to an Israeli defense unit. In August, The Guardian said that Israeli Defense Forces Unit 8200 had built a system in Microsoft's Azure cloud for tracking Palestinians' phone calls as part of the country's invasion of Gaza. Robinhood beat Wall Street expectations for the third quarter on Wednesday, extending a hot streak that has made it one of the biggest large-cap U.S. tech stocks this year. The results here shows that earnings per share was at 61 cents. That's against 53 cents that was expected. Revenue hit $1.27 billion against $1.19 billion that was expected. Revenue doubled year over year, while the net income climbed to $556 million for that 61 cents per share. And that's up significantly from the same quarter last year when the company posted net income of $150 million. Transaction-based revenue, which is a proxy for trading activity, came in at $730 million. And DHL Group's free cash flow surged 80.8% to 1.2 billion euros in the third quarter as the German logistics company generated higher profits while reducing capital expenditure amid volatile trade conditions. Operating profit increased 7.6% to 1.5 billion euro, despite revenue declining by 2.3% to 20.1 billion euro, driven by currency effects and lower volumes en route to the United States.